I was mentioning in December, there was that feeling that this market was going to really trade sideways, but started the year pretty well. What are your thoughts on what we're seeing?
Well, I think initial reaction to the market coming to the year is based on speculative trading, really. We do not see any fundamentals driving the trading pattern on the bourse at present.
So you're a bit cautious about what we're seeing so far?
Exactly.
All right, but looking at the outlook for 2011, particularly for the food and consumer-focused companies, they did very well last year. How do you see them performing this year?
Well, our outlook for those two subsectors are that of cautious optimism. And we say that with the benefit of hindsight. In 2010, if you look at how the sectors traded against the broad market, you see the food sector outperforming the general index by about 1,000 basis points. However, if you look at the individual performance of the stocks in the sector, you find out that generally revenues actually declined by single-digit levels year on year, and also profits declined significantly also on double-digit levels on the average. That also went or trails down to the consumption of working capital. Obviously, some of the companies in these sectors were challenged by the whole upheaval in the banking sector last year, and they were actually stifled of financing. So that impacted negatively on the performance. Also, if you remember last year, a lot of the key employers in the Nigerian market, i.e. banks and financial services companies, actually rendered a lot of staff redundant, and this ultimately had an impact on aggregate demand in the broad economy. So these obviously accounts for why we see a decline in revenues for foods and consumer goods coming into 2010.
So what's driving the optimism then, even if it's cautious optimism?
Well, if we're looking at the expansionary stance of the government's fiscal policy, whilst we agree that we're looking at the deficit going forward, given the 2011 appropriation bill at the National Assembly. However, we expect that issues such as the increase in minimum wage from about 7,500 naira to 18,000 naira would impact generally on demand in the broad economy. However, having said that, our caution stems from the fact that we do not see how government intends to finance some of the deficit in the economy outside the 500 million naira Eurobond.
Deficit of financing obviously has been a sticky issue with analysts this year. But what about risks? And I don't hear too many analysts talking about the naira and the stability of the naira. I guess with oil prices being at $90 per barrel right now, or $90+ per barrel, you know, there is the sense that, you know, the central bank will be in a very good position to step in and, of course, stabilize the FX market. Are you cautious about that?
Well, with the benefit of hindsight, the central bank did a good job of stabilizing the naira in 2010, and we do expect them to maintain that stance going forward.
Okay, let's talk about stock picks then in the consumer sector, the food companies, that space in general. Which stocks are looking interesting for you in 2011?
For us, we like UAC Nigeria PLC. Although we must say that the company recorded decline in revenues and profitability in 2010, up to 9 months, September 10 numbers anyways. However, looking at the fact that it's currently trading at about 1.3 times book value and a PE of about 12 times compared to an industry PE of about 20 times. And looking at the price to book trading at about 1.3 compared to an industry average of about 8-9 times book. Obviously, because of the rally that we witnessed in those sectors towards the end of last year, most of the stocks in that sector, for example, Nestle Foods, actually trading at close to 19-20 times book value. So UAC properties, regardless of the decline in financial performance, which was actually general in the sector in 2010, trading multiples actually look very good. Return on equity.
Valuation play, really.
Yes, exactly.
And then for the broader market, what are your expectations? Some analysts are saying that 1,000 is the level that they see the index closing the year. Do you share that view? That implies a return of about 25%.
Well, that I do agree. We are actually looking at about 30,000. We expect that this year the banks will play a key role in driving the broad markets, like they've done prior to 2009, 2010. And that's basically as a result of the AMCON initiative. We expect that by the time we have non-performing loans exchanging for the bonds to be issued by AMCON, and then which will result in the fact that banks will no longer see huge loan loss provisions hitting their P&L accounts, hereby bolstering profitability in the sector generally and returning the sector back to the bellwether sector that we all used to know it to be.
What about inflows from foreigners? The NSE released a report recently that about 50%, there was about a 50% increase in flows from foreign investors. How do you see that playing out in 2011? Do you think that dynamic is going to continue along that trajectory?
We expect it to continue, and the reason being that I believe that once we are able to get the political stability right, in view of the fact that we are in an election year, and once we're able to cross the hurdle of the general elections in April, I expect a high increase in inflows in FDIs into Nigeria. And that's obvious because we have such nascent economy, such nascent markets and industries waiting for growth. And opportunities do abound in these sectors.
And the NSC has spoken about deepening the market with ETFs and other, just pretty much making the market a little more sophisticated, giving investors a little more options. Do you think these things are likely to happen this year?
Well, given the current position of the stock exchange, I would expect that there's still further cleansing to be done before we start talking of expanding the product lines. Whilst it's not a bad idea in itself, however, there are certain structural issues that need to be addressed critically before we start talking about deepening in the market in terms of ETFs and so on and so forth. For example, what are we doing about the issue of market making? Are we going to continue with stockbrokers being all and end all, being all in all to the average man in the street? Are we looking at developing the mutual fund part of the market? So those are some of the issues that I believe we need to address.
So pretty much gearing the market for an institutional type market, so to speak, where institutions and institutional investors are driving the market.
Exactly.